Hello and welcome to Charting the Markets. You're with me, Sean Murison, Senior Market Analyst at IG South Africa. We have had GDP data out of the UK this morning, which did point to a technical recession, although the figure was slightly better than expected, a 0.1% contraction month on month. Coming up this afternoon, we do have some data out of the US. We have weekly unemployment claims, retail sales data, as well as Empire State manufacturing data. Let's look at some charts. And starting off with the US dollar. So we can see that trend reversal has worked out quite nicely, that inverse head and shoulders. That dollar has been strengthening and we have had a bit of a rally. At the moment, we're seeing a little bit of a retracement from overbought territory. But I think I wouldn't look at shorting that just yet. I'd be looking at buying into a pullback, depending on where it settles. Traders who are long might just consider trailing their stop loss. Maybe you want to just run a little trend line along these lows just to mark that new uptrend that has started to emerge on that. But certainly somewhere between, pullback takes us to somewhere between 103.80 and maybe that trend line support at 103.70 odd might be a consideration for long entry because that trend is up. We start taking out some major lows here, maybe start trading below 103.14. That maybe we consider that that's a short-term correction has gone a little bit further and maybe starting to reverse trend again. But at this point in time, that trend reversal is in place. We've gone from a downtrend into an uptrend, and we are looking at buying into pullbacks. And just in a short note here, we see the strong green candle followed by these small-bodied red candles. So this move up has been aggressive, and moves counter trend are cumbersome. And also, when you see this stochastic laboring in overbought territory, it's certainly not a signal to trade against a trend and suggest that maybe we can move into a consolidation. So from us, we're looking to buy into any short-term weakness. Looking to buy back into any short-term weakness on that US dollar. Looking at the euro dollar, inverse essentially, we've got a strong weighting of the euro in that dollar basket. That trend is down, so euro weakness relative to dollar strength. We broke the key level of support here, sitting at about 107.55 odd. There was a bit of a warning. We had this bearish flag suggesting that continuation on the downside. So we had aggressive move up, aggressive move down, weak move up, and then continuation on the way down. We are rebounding. I think traders who are short might want to trail a stop loss on maybe a close above that dotted trend line. But certainly, if that trend line does remain resistance, we are looking at a retest of that 1.0693 mark, and the next level of support coming in there somewhere around about 1.06580. Looking at cable. So when we were here last, we looked at this test this range that was in place, and we're looking at a breakout. We did have a downside breakout that hasn't really manifested into anything material for the traders who have been short. But with that range breakout, we looked at this level of resistance here at 1.2680 and suggesting that that might be a stop loss indication if you were looking at shorting the currency pairs. So at the moment, we've had our breakout, we've had our first pullback from that breakout, and we do look to be continuing that move down. The initial target there being somewhere between 1.2516 or possibly 1.2501. And if we get through that, then next level sitting at about 1.2415. So traders who are short, if you have the initial short, you'll probably just be moving back to break even now after sitting through a little bit of pain. If you waited for the pullback to try to get short entry into that move, it could be looking fairly good at this point in time. But certainly traders are short, maybe trailing a stop loss on a close above a 1 or 2 day high, depending on threshold for risk in that particular trade. But downside breakout still remains relevant. And we are trickling lower with 1.252 odd being that initial support target from the move. Moving over to some indices now, starting with the volatility index, which is obviously a gauge of risk in the market. Now we have seen risk on, and that indicator that index trickling lower, but it is at historical lows not seen since early 2020, January 2020. And we are still consolidating around that 14 mark. Now, volatility is considered cyclical in nature, meaning that a period of low volatility is a precursor to high volatility. And certainly we start seeing this picking up Now, stochastic here is suggesting that maybe we're starting looking at a bit of a rebound. Then there would be a suggestion of probably risk off in the market. Hasn't happened yet. We'll wait for the move. We had a bit of an intraday spike, but it hasn't held up. But just one to watch in terms of general risk in that market, in the global marketplace. US Tech, the Nasdaq 100, that long-term trend is up. Now, we have just started to had a little bit of a very, very shallow pullback from overbought territory. Like we said before, we see that indicators laboring in overbought territory suggests that there's an uptrend, a strong uptrend in place, and not a suggestion to trade against the trend. But if you do expect weakness, maybe waiting for weakness to play out to join that longer-term uptrend. Now, we have had a shallow pullback, which does say that buyers might be eager to get back into that market. And that little pullback does look to have ended with a bullish reversal at that 17,600 mark. A bit of a bearish, bullish harami there. So just showing the price has pulled back, it's ticking back. It is quite an aggressive trade if you were looking to take the long positions onto that Nasdaq, but the bias is still to the upside, and that 18,035 mark being that initial resistance target. And then we have a bit of an overhead resistance sitting here somewhere about, and it's a moving goalpost. Last week, look at 18,115 odd. We revised that up to about 18,250. I think if you are taking the aggressive trade, well, I want to consider having a relatively tight stop on a close below that 17,600 mark. But certainly, even a move below that is not a suggestion at this stage to trade against that underlying uptrend, which is firmly in place, but maybe just a suggestion to wait out further weakness and look to see where we can join this very aggressive uptrend that we have seen this year so far and last year. Now, S&P 500, very, very similar picture. Obviously, a lot of the constituents in the Nasdaq that move the Nasdaq do move the S&P 500. You know, the big tech companies, Microsoft, Alphabet, Nvidia, to name but a few. Similar picture. The longer term trend is still up. Very, very shallow pullback. That shallow pullback has ended in this harami type fashion. Off that support there, thinking about 4,935. Now, you do have to be quite aggressive to get involved in a market, especially when it's trading so close to all-time highs. And so I think if you are a bit more risk averse and maybe waiting for a bit of weakness to play out further and, you know, hopefully picking up at a better, more favorable level, but it also runs the risk of missing out. So the signals are there. We have this bullish candlestick pattern at support, suggesting initially a retest of that high 5046 odd. And we can project a longer term target there, sitting about sort of 5,160 odd. But again, if you do see this fail, and I think we close below 4,935 would suggest a failure of this sort of bullish candle pattern, which is giving a signal in line with that longer term uptrend. But if that was to fail, my preference there again is not to try short that move lower, but rather to wait for weakness to play out. Look at one of the lower levels of support, looking for the price just to tick back there before finding a long entry at one of those lower levels. Now, moving over to Europe, we have the DAX testing a breakout. So we have an uptrend that is in place, markets making new highs, and it is testing resistance of a short-term range, and that resistance level being at 17,065. Now, as we move into that new high territory, we've got to look at ways to project those targets. One of those ways is to measure the height of this consolidation, project it, look for a proportionate move, much like if you're looking at a triangle type consolidation. That would suggest if we do get the breakout for me would be looking for the price to settle above that resistance of 17,065. So a close above there. We're looking at daily charts on all of these charts. Then we'll be looking for a move to that 17,360. In that situation, where would you put your stop? For me, it's somewhere in the middle of this range, probably about 16,920 odd. But again, the breakout hasn't confirmed yet. We do need to confirm. If it doesn't confirm, in line with that longer term trend, which I think is up at this point in time, I still wouldn't be looking at shorting. I'd be looking at where to pick it up. So for me, long entry looking for an upside breakout, close above resistance, or in the event of a pullback, looking for a reversal at one of the levels of support, and that initial level of support being 16,790 odd. All right, moving over to the FTSE 100. Different environment, what we see here. We've been talking about this range-bound price environment on the FTSE 100 for quite some time, and the approach there is when you have a range, a broad range like it is here, trading between the levels, or waiting for breakout of that level. Now, what we do have is we had a move back and we had a bullish price reversal. So we had a nice bearish reversal off that 7,700 level. We've had a move lower. That move lower looks to have ended with a bullish price reversal. So there's the green candle preceded by the red candle, suggesting that price has now ticked back up. And that move accompanied by an oversold signal. Now, a move out of oversold territory. Now, this one's a little bit more difficult because it didn't quite reach our level of support there. And it is quite long-bodied candles there. So, if you do pick a bias with those technical indications, it is to the upside, suggesting a move back toward that 7,700 mark. But is that really favorable from a risk-reward perspective? Where would you put your stop loss? Well, if you looked at below that reversal low, 7,464, it is quite far away, quite close to support. So, but we do have a bullish reversal, ending the short-term move lower. And we do have that reversal accompanied by a move out of oversold territory. So it is suggesting a move higher, and that upside target being 7,700. From current levels, though, I'm not sure it's the most favorable trade in terms of a risk, the amount of risk taken relative to the assumed reward. But now moving up to some commodities. Looking at Brent crude. Now Brent crude also in a range-bound trading environment. Recently, we've had some nice signals here. We had this, bearish reversal move lower. We had a bullish reversal, which we talked about recently. It's rallied up, found resistance at the 82.80 level, and then we do have a bearish price reversal again. So these two candles off this 82.80 odd level, a bit of a what we call a bearish sash. The green candle being a bit of a shooting star type formation, so showing just a bit of a price rejection at the high. The red candle showing a bit of follow through on the downside, because this candle would have closed well off the highs and moved and traded, got rejected off those highs. The following candles showing some momentum to the downside. So short-term bearish reversal on Brent crude at this point in time, suggesting a move lower. I think you could have a level of support sitting at about $78.80 or $78.90 per barrel initially. And if you were trading that on the short side, maybe having a stop on a close above that 82.80 level might be a consideration. Okay, looking at gold. Gold also in a range-bound trading environment for the short to medium term. We've been looking at these levels and having some interesting bullish and bearish candle patterns off the levels. And like I say, when you're trading ranges, if you have a consolidation type environment, a range-bound environment, what we're doing is we're looking at trading reversals off the level, or we're waiting for breaks of levels. Now, this situation, we do have a downside break of support, downside break of that $2,010 per ounce mark, substantial close below that. That does still target a move toward 1,970. Yes, we are having a little bit of a rebound at this point in time. That might, provided that 2010 remains resistance, we still favor a move towards that lower level of support at the 1970. We start trading above that, we see a strong close above that, then we could change the short-term bias to that move. If you traded that initial breakout, for me, I like to wait for the first pullback from each breakout. So downside breakout, currently pulling back now. Maybe waiting for this move to peter out, looking for short entry, targeting a move back towards that 1970. And then looking at a short-term reversal high. And provided that reversal occurs before 2010, using that as a close above that as a stop loss indication. Right. Last but not least, platinum. Another range-bound trading environment. So there's a lot of range-bound securities at this point in time to trade, trading between levels or waiting for breakouts. And this one's been working quite well, conforming quite nicely to our levels where we've had a nice bearish reversal at 1940. We found support at our level that we've had in for quite some time, that $875 per ounce mark. And we do have a bit of a consolidation, but it's turned into a reversal with a bit of an upside break there. So a reversal of support at 875, accompanied by a move out of oversold territory. Now, when we look at the price, we see the price making lower lows. And when we look at the indicator, we have the indicator making higher lows. So they're not moving in the same direction. That's considered a positive divergence in technical analysis terms. And so the suggestion is that we are, a bit of momentum to the upside. We could see further gains. 940 being the resistance target. Could be a bit more conservative on their way up, maybe $930 per ounce mark. And then where to put your stop loss? Well, there's a consideration. Maybe a close below that 875. If that's too far, then maybe a close below a 1-day low on that. All right, that's all the charts from me. I'm Sean Murison, a senior market analyst at IG South Africa, and thank you very much for watching.